Good afternoon, everybody. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Monday, everybody. We are back at it again. We have a special episode. Normally, we do this Fridays, but guys, Palantir gave earnings today, and I had to talk about it. I had a feeling it was going to be good. It could have been terrible, but I had a feeling it was going to be really good just because there's been so much news about Palantir getting this deal, Palantir getting that deal. They blew my expectations out of the water. It doesn't make sense, okay? And this is exactly why I said this was a millennials Microsoft, okay? And when people have brought that up to me, like, oh, millennials Microsoft, that's a crazy strong statement. I didn't mean like they're going to be the next Microsoft. I meant that if you would have invested in Palantir at 16, which is when we brought it under the radar for us, that's like buying Microsoft way back when in the early 2000s, mid 90s. That's what I meant. That's how excited I am about this company. It seems like one of those stocks that's just, Microsoft is a household name. I think Palantir is going to be that, and they keep proving it right over and over and over again in a crazy way. Like they beat earnings, right? But they're already the expectations are already so high. It's kind of like LeBron James gets MVP 4 years in a row. Like, what can he do the fifth year? There's no way he could get another one, and then he gets three more. It's one of those kind of things where it's just like, how can they keep doing it? And we're gonna go over it today. We're gonna dive in after the news here. I'm gonna give you some info on Palantir. You're gonna get the what is Palantir, the why is Palantir, and the how. How is Palantir doing this? All right, and I'm gonna try and keep it as surface level as possible, but it was important to me because I have a feeling this company is gonna be in my portfolio for a really, really long time, and there is moral questions around Palantir. There's no doubt about that. I can't hide from that. There's just no way. It's one of the most hated companies in the world because it's one of the most misunderstood companies in the world. And I adamantly feel that way, right? And we'll go over it. But anyways, you're going to get the what, you're going to get the why, you're going to get the how. And I hope that even if you're not invested in Palantir, you will at least leave here knowing that they're probably not evil. Okay, that's one of the big things about the company. People think it's evil, and I 100% disagree, and I'll explain why. But let's do the term of the day real quick: gross profit margin. Now, I wanted to pick that term because Palantir's gross profit margin was the number one thing that I liked about the company 24 months ago. They have like an 80% gross profit margin, which is ridiculous. A lot of tech companies have high gross profit margins because there's not a lot of purchasing of hardware. And so you kind of get to keep a lot of what you make or keep a lot of what you sell. So let me explain gross profit margin, because if you can grasp this concept, you can spend 10 seconds Googling a company and kind of getting a concept of how efficient are they? Are they an efficient company, right? That is one of the most important things about making money, is how efficiently you can make that money. Okay. Gross profit margin measures how much profit a company makes for every dollar of revenue after accounting for the direct costs associated with producing or purchasing the goods or services it sells. Okay. So how much money does a company make after subtracting the cost of what they're selling? Okay, so cost of goods sold. So the formula, and if you want, which I recommend, write this down, very, very easy. Gross profit margin equals gross profit divided by revenue times 100. You don't really need to times it by 100, but for some reason, people like whole numbers. I prefer percentiles. It really is a percentile, right? So you had a gross profit margin of 0.8, that would be 80%. Anyways, let me give you a picture here so you can see it, okay? If a company has $200 in revenue, that just means money that came in, right? If I sold $5 of lemonade, my revenue is $5. Okay. So company has $200 in revenue and $100 billion in costs of goods sold. Again, cost of goods sold is whatever it cost me to buy to be able to have the stuff for the lemonade. So the stand, the cups, the actual lemons, the water, that right there, that's the cost of goods sold. Let's say that was $100. So if a company has $200 in revenue, $100 in cost of goods sold, you're going to do an equation here, right? So the gross profit, which is the first part of the equation you're memorizing, is 200 minus 100. So that's the revenue minus the cost of goods sold. Okay? I know it's a lot. Just stay with me. So now we have 200 minus 100. We know that's $100. That's the gross profit. And then we already know our revenue because that was 200. So now you'll take 100 divided by 200. What does that equal, right? That equals 0.5. That means 50%. Now you're supposed to times it by 100 to get 50, but 50%. That's what we like. If you can learn how efficiently it costs. So another way of looking at that is they had to buy $100 worth of stuff to get $200. I probably should have led with that, huh? That's all right. That is a 50% efficiency market, right? You spent 100, you got 200 back. So that is a 50% efficiency, I guess you could say. Palantir's at 80. That is massively efficient. And anybody that says you spend 100 and you get 200, that's pretty decent, right? That's a decent profit margin. There's no doubt about that. Anything north of 70, you're talking really, really efficient at making their money. So, term of the day, gross profit margin. Remember, it's gross profit divided by revenue times 100. Okay, let's get into the news, and then we'll get right back into Palantir, guys, I promise. Today was a great day. A lot of stuff happened, and the weekend was bad, right? Friday was not a good day. So, all right, stocks surged Monday, led by tech sector gains as the market recovered from a steep decline at the end of last week that was sparked by renewed concerns about tariffs and the health of the economy. The Dow Jones and Industrial Average rose 1.3%, 600 points, while the S&P 500 added 1.5% today, as the tech-heavy NASDAQ composite jumped 2%. The major indexes tumbled on Friday after the July jobs report showed that the labor market was far weaker than previously known, and President Donald Trump issued an executive order imposing higher tariffs on dozens of partners. The benchmark S&P 500 index, which was coming off its worst week since mid-May after hitting a series of record highs in July, snapped a 4-day losing streak today. The calendar of economic data is light this week, but the schedule for earnings reports remains busy. Remember, earnings reports, that's the most important thing for us as individual investors. Earnings reports, it's the number one thing. It's not the only thing, but it's the number one thing. Companies like McDonald's, Disney, Eli Lilly, Novo Nordisk, Advanced Micro Devices, Uber, and Palantir Technologies. Woohoo! Shares of Palantir gained 4% before the release on Monday after the closing bell of results from the data analytics software provider and AI investor favorite. AMD shares rose 3% on Monday ahead of the chipmaker's scheduled earnings release later tomorrow, helping to lead up a broader rally for semiconductor stocks. The VanEck Semiconductor ETF SMH tacked on more than 2% today. Mega-cap technology stocks were mostly higher, led by gains of nearly 4% for AI chip giant NVIDIA and semiconductor rival Broadcom. Let's see. What else do we want to know? Berkshire Hathaway dropped 3% Monday after the Warren Buffett-led conglomerate reported over the weekend that its operating profit fell 4% in the second quarter and warned of the potential impact of tariffs on its business and stock investments. The yield of the 10-year Treasury, which affects borrowing costs on all sorts of loans, notably mortgages, was at 4.19 in the late afternoon trading, down from 4.22 at Friday's close. Bitcoin was at 114,600, up from 113,500. Okay, I do want to, obviously, that wasn't my best reading episode right there. I'm reading this for the first time today, so I was very focused on our Palantir conversation we're about to have, but the Berkshire Hathaway is a very small paragraph in this, and I think it's the most important thing, so let me just touch on that. It's very possible tariffs affect the market, individual companies significantly in the next quarter. It's very possible. I don't really know if you're a broader index investor, if it'll really make that big of a difference. I just don't, almost no tariff was really implemented on a massive, massive scale. Now, a lot of tariffs were implemented over many countries, but there wasn't any significant industry that I would say that is really tackled by tariffs, except for maybe the chip market, which is, we're not selling chips in China right now because that's a imposed tariff, so to speak, on China. So, and chips are doing fine right now. I would say it's probably something to be concerned about. The tariff fall down, I guess, fall out. We have to see what happens. Anything that comes from that, I would buy the dip. I would buy the dip at any time. Okay, so like Friday, it dropped 1.5%, 2%. Bought the dip for some clients. Again, we're dollar cost averaging into these dips, right? Everything is a process marathon. You're not trying to get a 40-second mile time, right? You're trying to get a 7-minute mile time. You're trying to get a sub 2-hour marathon time. Everything is about the whole race and not just a section of it, right? So one bad earnings report does not mean it's a bad company. That's basically what I'm saying. Okay, let's do it, dude. Let's jump right into Palantir. First things first, Palantir murdered the earnings report. They had a earnings per share expectation of 13 cents, and they crushed it with 16 cents. Now, I know a lot of you guys don't really have that. Like, that doesn't sound like that big of a gap, right? A 3-cent difference, 13 and 16. It is a lot like running, and it's a lot like running sprints. So the difference between someone running a 9-second 40 and someone running a 10-second 40, that is a huge, huge gap, right? And it works that way with earnings per share as well. So consensus, like analysts trying to predict what the earnings per share will be, is typically they're pretty close, right? I give them a standard deviation usually, and they're usually right between 2 to 3% either way, right? So in this case, $1.30 above or below 13 cents. Sorry, not $1.30. 1.3 pennies above or below 13 cents would have been a fair, like, oh, they did analysts were close. They weren't close at all. And the reason they're not close is because this PE scares people. The company's PE is trading at ridiculous highs. I don't know what it's at right now. I would have to go look after this new report as of today. It's probably lower because they have so much revenue, but it's still in the hundreds, which is ridiculous. Anybody would tell you if you just showed them that number and didn't show the name behind the number, they would say that stock is overpriced. I hold the sentiment that just because the PE is very, very high does not mean the company is not a buy. It doesn't mean that it can't keep going higher. And it goes the opposite way too. Just because a company is 70% down from its all-time high, we'll use PayPal, for example. PayPal's done horribly. That doesn't mean that they're going to come back up just because they're a name brand, right? They could go to zero. PayPal could absolutely continue to drop. Excuse me. So that's why analysts got this so wrong. It's just too much in the numbers that says, that, whoa, be weary of this stock. And by the numbers, I mean what happens in between earnings reports. You look at this earnings report that I'm about to walk through with you, some of these things. I mean, look, they had their first billion-dollar quarter, 48% up year over year, 14% from last quarter. Revenue in the U.S. alone was $733 million this quarter. Their commercial segment, $306 million. That's up 93% from the year before. Okay, that is incredible. Their government segment, which is what they're known for, up 53% at $426 million. They closed 157 deals this year that were at least over $1 million, 66 that were over $5 million, and 42 deals that were over $10 million, one of those being a $10 billion contract with the Army. They have no debt. They have zero debt. Okay, they have billions of dollars in cash. billions of dollars in cash. Do you guys hear that? Billions. They have an immense amount of free cash flow that almost no company has. That is an insane thought process. They just have all of this cash ready to do things with. It could be expand. It could be hire new people. It could R&D. It could be invest in other smaller companies. And insane. Okay, so this says they have $6 billion in cash. That's crazy. What else do I want? The guidance for the next quarter for Q3. Oh my goodness, is 1 billion, 1.087 billion. So they're increasing it just a little bit from this quarter. I mean, that's ridiculous how well they're doing. This type of company doesn't need a lot. Like, there's not a lot to sell, they don't need to have a lot of material to make their stuff because it's a service. So you kind of make the initial software, and now you're selling that. That's really all it is. And you implement it within every individual company that they're selling this to. So that's why they killed it. They had an immense amount of deals, some huge deals. And guys, I really believe this company is going to the moon. Now, I will say, I'm not putting anybody right now, any new money into this company. I am not doing that. And I've put a lot of stop orders on any of our clients who have this, because this stock is going to be volatile. This stock, without a doubt, will have a 40% drop sometime in the future, right? And I'll say roughly 24 months. Now, it could go to 500 and then drop to 300. That could happen. And, we're obviously very far away from 500. But I'm just saying that volatility does scare me. And even though I believe in this company, it is a long-term belief. And I wait for those drops. Okay, it's contrarian investing. I know it's extremely difficult for emotions for that to make sense. But the second that this has a big drop, people are going into it. Okay, I'm going to put money into it. That is the smartest way to do this. And I encourage people, which is why we have stop orders, take your profits. Okay, we have some clients who have 500, 600% profits. They don't need to stay in this stock. It's called uncovered. They don't need to be uncovered. They can cover themselves in this. Okay, right? What if the stock does drop 40% and we put a 10% stop, meaning that there's an automatic order in that if Palantir, let's say it's at 170, if it drops $17, that's a 10% order. It'll trigger a sell right there. Okay, that's protection on the position. Right, so yeah, you did lose 10%, but you didn't lose 40. Okay, and it just makes it easier to cover your butt that way, especially when you have massive profits, which you shouldn't be a profit monger. If you got good profit, take it. Okay, don't ever feel bad for making money. Okay, you will always be able to say, "Oh, I could have waited. Oh, I could have made more." That's not what you're trying to do here. You're trying to make great return with very minimal losses. And if you do that over your lifetime, you will be exceptionally wealthy. Okay? Exceptionally. Okay, now what is Palantir? Okay, and I know I'm over my 15 minutes here. I promise this is worth it if you're still listening with me. Palantir, the best way I can describe this to you, I mean, they're a tech company, they're an AI company, software. Okay? They put the code in that does something on your computer that allows you to do things more efficiently. That's kind of what software is, right? It's the video game that is in the Xbox. The Xbox is the hardware, okay? And then the video game you download, that's the software. Palantir, on a very surface level, what do? They are an internal consultant. And I had to visualize this as best I can because that doesn't even make sense. What do you mean they're an internal consultant? Well, whenever our firm grows significantly, right? Let's say we get to $1 billion under management. I'm going to probably want, and I've already thought about this, at my previous job, there's a gentleman, his name's Steve. Steve is exceptionally successful, very good at this job, knows it inside and out. almost nothing I could ask him he doesn't know. He's been in the industry for 40 years. I could go to him and say, hey, I have some questions. He's going to have answers. That's a consult. That's a consultant. Okay, I would hire him to help me be more efficient, grow faster, hire better people, manage money better, et cetera, et cetera. That is a consultant. Consultants are very expensive. This platform, this software, effectively creates your own consultant within the company. Now, I'm being as rudimentary and surface level as I can be. Realistically, they would call this like a full stack platform that does everything: connect, clean, fuse, analyze, visualize, and then implement data. That's sort of how they would say it. But that's exactly what a consultant does for people. It tells you what you need to do and then gives you actionable plans to do it. So there's Gotham, there's Foundry, and there's AIP. Gotham is used by governments. This is what they're kind of known for, and this is their foundation of their business. Then Foundry, which is used by their commercial clients, mainly manufacturing, some hospitals, and now banks are starting to use them. But that's the side that I really, really like, the commercial side. They grow that, man, because if they can make companies more profitable, it doesn't matter. Companies will stick with them and pay more and more and more to make it happen. So Palantir is already expensive to use, but think about that. They make companies so much more money that it doesn't matter what they cost. They'll pay an exceptional amount of money. You will always, well, most likely, you'll pay $25,000 to get $75,000. You'll just do that. That's a no-brainer, right? That's what Foundry does. And then you have the AIP, which is, I don't really know much about this one yet, but it is their newest product. And it's supposed to be like ChatGPT, but within all of your proprietary information. So I guess it would be like if you had a secret recipe, like think of the Krabby Patty recipe from SpongeBob. There, you could integrate the AIP into the restaurant, and you could maximize the secret recipe into other things. And now you have secret recipes for 15 other things, but it's all themed under your Krabby Patty. Hopefully that makes sense. That's how I read it. I still need to do a little bit more research on that. The big things with this, though, is that they make they're expensive, and they save people money. So somebody pays you $10, pays Palantir $10, they get back 20. It's a no-brainer, absolute efficiency, money-making investment. So just like they're efficient with their gross profit margin, they increase other companies' gross profit margin. And on a numbers basis, that's the best description I can give it. They make you more efficient, you make more money. That's what they do. They're a consultant with AI, data, workflow, processes, system. Okay. Again, when I hear that, even as I'm speaking it, I go, that's a bunch of mumbo jumbo. I really like the consultant answer. They consult you on how to be better, faster, stronger. Okay. Now, why? Why does Palantir do this? There's two really big players with Palantir that you need to pay attention to. You have Peter Thiel and you have Alex Karp. Peter Thiel is a co-founder. He's also a co-founder of PayPal. Guess who also is a PayPal co-founder? Elon Musk. So now you have two of the greatest minds ever who have now, they're both billionaires beyond many times over. They created PayPal, left PayPal. They both went on to do their own ventures, and now both of their ventures are absolutely killing it. Peter Thiel is he still speaks, but he's not a CEO or a C-suite with Palantir. He's just one of the co-founders. He had an interview that really did not look good, and I'm going to put the link in our description, and I want you guys to go to this interview. Okay, it's at 37 minutes. It's a YouTube link, so it's not going to be anything weird. Go to 37 minutes, and I want you to listen for 3 minutes exactly. At about 1.5 minutes from 37, so like 38:20 to 38:30, he gets asked a question about, does he think the human race should endure? And this exact clip is why people have just rage baited at Palantir and Peter Thiel that it's the Antichrist, it's evil, it's not a good company. And I, with my whole heart, believe it was misinterpreted. And it's not sincere of what he actually thinks. And I say that because when you watch the interview, you can see that he's processing 3 different questions that the interviewer is asking him. And the interviewer's name is Ross, some guy from he's an author, but he's also a columnist for New York Times, I think. He's basically trying to bait this guy into saying Palantir is evil, right? But he's asking him 2 or 3 questions at once. Peter gets ready to answer. Like, he's literally like, and then he's processing that answer. And the interviewer comes in and says, don't you want the human race to endure? And so this guy's clearly, listen, to be this level of successful and brilliance, you got to be a little quirky, okay? Just like Tesla, or just like Elon Musk isn't the most efficient speaker at times. He takes his time, processes every possible answer, and then speaks. This guy is also on that level of quirkiness. He's doing that in the exact moment of that critical question. Do you want the human race to endure? So he gets trapped in this, and he doesn't answer well. I'll be honest with you. He answers pretty bad. But people clip it, and they don't. They start with the question, do you want the human race to endure? But that's not really where the conversation started, right? There was already questions being answered that Peter was contemplating and thinking over. So that's the first thing. I think that it's a loaded clip. It got clipped and it went viral. That's kind of what my opinion is on it. I've listened to Alex Karp talk enough times, and he is significantly more wordsmithy, I guess you would say. Wordsmith's not even good. He is very blunt, direct, and confident. I'll say that. That's a better way to describe him. He's the CEO. He's the guy with wacky hair. He's probably like the mad scientist in the lab coming up with all of these concepts. He is interview after interview after interview saying, we want to help the good guys and catch the bad guys, right? Bad guys are terrorists. Okay, they're mainly focused on the terrorist side of stuff with the military. They do a lot of NATO and U.S. work. They don't work with a lot of foreign countries because they do realize how powerful this tool is. It will make a difference militarily in almost every possible facet for the U.S. military. Okay, that's how amazing and incredible this stuff is. And our enemies, the bad guys, won't have access to it. It will only be us. It'll only be us. Now, this is where I have a little disclosure caveat here. Yes, a gun in the wrong hands could do a lot of damage, right? But there's also thought process that if the good guys have guns, that stops the bad guys. Right now, the bad guys don't have any guns. So, as long as there's good people in charge of Palantir, it's going to be useful and it'll do good and it'll be good for humanity. There is an argument that this is such a crazy tool that if fallen into the wrong hands, it could be pretty bad. So that is my disclosure, my caveat. Luckily, right now at the beginning, that's not the case. Okay, the good guys have the guns. As long as it stays that way, I'm a big believer in it, and I love it. So lastly, the how of this. How do they do all this? They have AI systems just like a lot of other companies. What makes them so different and what makes them so unique is that they didn't make money for 20 years. They've been around since the 2000s. They waited and they built and they improved and they implemented and they built this beautiful, beautiful system that can effectively plug and play into every company. And it's not like, oh, well, we have to build this out for your company. No, we will implement this into what you already have, let it run, and then we will maximize your company to its most efficient form. That's what makes it special. On the sales side, this is really cool. They have a like a boot camp, I guess is what I would say, like a 2-week, 1-week boot camp. A try before you buy. Hey, Why don't you come in and we'll just we'll put you through some of our through some of our systems for a week. Send your middle manager guy. Just send him in here for a week. Stay with us. We'll run through systems for a week, and you can get a real taste for it. You can get a test drive. That speeds up the sales cycle so much, and you're not reliant on having great salesmen. You're reliant on your product, on your product being great, or your service being great. And when that happens, boom, people will talk. People will, hey, they'll move up the line, chain of command. We need to buy this. We need to buy more of this. We need to do more. And once Palantir gets in these companies, and this is probably not the best visualization, but this is how I view it. It's like putting a bunch of hooks in a fish. Okay, that fish is not going away, right? Palantir is so integrated in every facet of these companies. It's like catching a fish with 6 hooks, right? That fish ain't going nowhere. That fish is with you. And that's obviously not the best visualization, but from a sales cycle, it's a beautiful one because they're able to get sales done better and quicker. And that's what makes them really a great company from the inside out. Guys, that's it. I've been ranting about it. You can clearly tell I'm very passionate about this. I'm passionate about this with every company we invest in. It just so happens that we caught a great company early. Okay, Palantir, it's very possible I may never ever pick a company as good as Palantir. And that's part of the reason why I want to ride this wave as far and as high as I can. This is why this is why I am viewing Palantir as the millennials' Microsoft. Okay, it is trailblazing, it's changing the game, and it's quite possible that it does better than Microsoft. And I would encourage you to just play, just participate a little bit. Maybe not right now, all-time highs, but once that big drop comes in, maybe you put $1,000 in, $100 in, and you just wait. Okay, you just wait. Anyways, we have lots of stocks that we like. Our portfolio this year has killed it. We're talking multiple of the S&P 500. That doesn't necessarily mean it's going to keep happening. But for right now, we're doing great. And stocks to watch, guys. Stocks to watch. We'll talk about that probably in the next month or two, if we've added any and some that we haven't. But Palantir, I can't get enough of it. And I hope you guys understand it and can defend it whenever it comes time if you hear people talking bad about my boy Palantir. Anyways, okay, I have doubled my time. As always, invest early, invest often. We'll see you next week.